Today's top picks from Reuters Breakingviews. To cheer or not to cheer, European markets optimism may well run out of puff, and the sale of Lehman collateral dregs send a warning to the ECB. Joining me is Robert Cole. ECB liquidity injection, a weaker euro, Robert. It's been supporting the markets, but not for long, you say?
You know, we've talked about this, and you've characterised me quite correctly as the only bull in town.
The doom monger.
No, the only bull in town. So what I'm doing here is trying to inject a little bit of caution, a little bit of pessimism, if you like, into the story. I mean, I remain very bullish about it. Equities in particular, I think the valuations are very. It gives a very a fundamental reason to be accumulating these stocks, but I can't help feeling that the strong start to the new year is based on pretty shaky ground. The ECB liquidity announcement announced on December the 8th, I think, it's great, it's working. I'm not trying to diss it or anything like that, but it is a sort of money flow situation. There may be some more money coming, and if it isn't as much as the market expected, certain parts of the market might get disappointed. Of course, if there isn't as much money coming, that's actually good, because it means that the ECB doesn't have to support. So what I'm trying to say is that, let's look on the bright side, but let's not get ahead of ourselves. But equities have gone up quite noticeably, the euro's gone down quite noticeably, and sovereign bonds the yields on sovereign bonds have dipped down. I'm just wondering, are we really as optimistic? Are we really justified in being optimistic about the short term as the market seems to be?
When's this turn going to come, do you think?
Which turn?
Well, when the market suddenly doesn't find the support from that it's been getting.
I think it could be quite soon. I think we could see it in the next couple of weeks. I suppose the immediate sort of risk is that we'll have an the second tranche of LTRO, and lots of people are going around saying that it'll be of the same level of 500 billion that was last time. If suddenly it comes out at 150 billion, that could be something, for example.
Okay. Bundesbank selling 2 billion euros of risky debt. It reminds us, You're going
to tell me this is a 3-year-old story, and why are we commenting it, aren't you?
No, I'm not. I mean, they're doing it now, let's face it. It reminds us of something that didn't happen too long ago.
But it is a 3-year-old story, but that's the whole point here, is that, with that ECB LTRO that I was talking about, a critical part of that is that the ECB, and I think wisely, is accepting a whole load more different kinds of collateral. Now, what the Bundesbank is doing here is offloading some collateral it took ahead of the collapse of Lehman Brothers, and it's going to be lucky. It's going to be very interesting to see what prices they get for it. The quality of that collateral wasn't as good as what the Bundesbank took before. The quality of the collateral that the ECB is now taking is not as great as not as good as it was before. So, there are moves here and I think all this has to be taken into account when one analyses or indeed promotes these sorts of actions.
Okay. Robert, many thanks for that. Robert Cole. If you want to watch our US show, that comes on every day at 12:30 Eastern, 17:30 GMT. I'm Axel Threlfall. This is Reuters.